Welcome one, welcome all to DeFi Crypto and Airdrops. I am Mike, aka Veteran Crypto, and let me pull David up here real quick. All right, one second, brother. I'll get you pulled up. Let's see where we at. We'll just add you to scene. We're gonna do this all janky like. Let's see. All right, there we go. How you doing, brother?
I'm doing really well, Mike. I'm doing really well, man. How are you?
Oh, I'm doing great. Just got done with your live call, did my little yoga workout, drank my shake, and now I'm ready to talk some DeFi. So it looks like Jake's not able to make it today. He had to go get his bikini waxed, and
Oh, yeah,
just kidding. He got a bug and isn't feeling well. But if you got friends and they're not giving you shit, then you don't got friends. So
yeah, man. I hear you. I sent him a nice little GIF via text earlier.
yeah, I saw that. The little baby looks like it's coming out of the bathroom, and he's like realized he wasn't done yet.
Exactly, man.
All right, all right. Well, towards the end of this, remind me, David. I need to remember to vote. The past two episodes we've done since daylight savings,
Yeah.
I've forgotten to vote. And one person that's watching the show right now, Jason, he was actually one had a question for me, and it's just easier to show than it is to tell about it. But let's go ahead and actually, real quick, let me do this. Let me share my screen, and I'll show the DeFi University and all the good stuff that we got. Let's see. There we go. And then let me add Jew to this. Doop-a-doo. Let's see. That should be good. All righty. So, if you're not watching on YouTube, if you have questions for me or David, probably for David more so than me, go ahead and come on over here to YouTube, and you can join it in the conversation. If you scroll or if you pop over here and hit more, there's all of the links. So, if you're interested in Metrics Finance, which is Jake's portfolio tracker for DeFi, that is the link to get to it. David's DeFi University. Like I said, I just got off the live call Monday through Friday, obviously not on holidays, but he has an hour-long live call that you can tap into the community, other people that are at different levels of expertise in DeFi, and of course, David himself. You can find my X account, my co-host Jeff, his X account, our Discord, the Discover Crypto Discord as well, and then my new DeFi WIZE newsletter. So those are all links that you'll find in there. If this is the website for DeFi WIZE, it's WIZE with a Z. I told up my community about the name, and somebody went and bought the domain out from under me. I don't know who it was, so I had to switch it up and make the S a Z. So it's
That's
now DeFi
horrible.
WIZE.
Who
But
does that?
I don't know because it was available. And then I mentioned it to the community thinking, yeah, I didn't think anything of it. And somebody went and bought the domain. So I thought that was a pretty underhanded thing to do.
Yeah.
But that being said, and it's only $20 a month, Monday through Friday. I get up at 4 a.m. My brother Taylor gets up as well, and we have a quant, and we put together a really nice newsletter that lets you know what's going on with the markets. It's about a 5 to 10 minute read while you're drinking your morning coffee. It includes both traditional and crypto markets. So, and then just kind of little clips of news that's out there. So easily digestible. Definitely worth $20 a month to sit that with the time it saves you. And we have a bunch of people in the community that said it's paid for itself already, just with trading ranges and stuff that we give. And then last but not least, we have DeFi University. This is what I was talking about on the calendar. You can click on that. And basically, these are the live calls, each day. And so you can join the live calls and again, ask your questions, be a part of community. And of course, David has a ton of courses in there that kind of walk you through on your own to where you can learn wherever you're at in DeFi, continue your journey, and get more and more knowledgeable and more profitable. So let's kick it over to here so you can see our beautiful faces. David, what do you got going on today, brother?
Oh man. So what I've been working on is some educational content. So, I know just how important it is to build a skill set, a crypto and DeFi skill set. And so
Mhm.
what I've done, Mike, is I've built out 4 courses: uh, investor mindset, liquidity provision, perpetual futures, and money markets. Those are I guess you could call them like the 4 horsemen of success in DeFi and crypto. You've got to master those 4 things, and there's a reason why the mindset course is number one. So, Mike, I don't know how to share links with people that are on the call, but what I'd like to do is just walk you through what I've built so far because it's in draft format.
Do you have the chat that's over to the left?
Yeah, I see that, but it
You should be
doesn't
able to
let
drop
me
it in there.
post. Yeah, I must be doing something wrong here because I see the comments, I see private chat, so I can only post in the private chat, it looks like.
Well, if you want to drop it in the private chat, I can drop it in the.
Oh, gotcha. All right. Yeah, let me go ahead and do that real quick. So I've got, there are 4 links here, and I just went ahead and, pasted those in so you see them now, Mike. Um, So those are the first 4 courses that I wrote. It's in a series of, I think, what's going to be about a dozen courses. But I wanted to start with these 4. And, the investor mindset stuff, there's a reason why I've been working on that one first, because I think the mindset stuff, the psychology stuff, that's probably the most important part.
I know
Learning.
real quick. I know that that's what's gotten me as far as I've been able to get is just the discipline, the mindset. Whenever the markets are going crazy, I am always calm, always collected. I don't allow myself to get emotional, and it keeps me from making really dumb decisions. So I definitely agree with you.
Yeah.
Mindset is by far the foundation of being able to navigate these markets and not get wrecked.
Yeah, no kidding, man. I mean, our emotions tell us to do exactly the wrong thing at exactly the wrong time when it comes to markets. And
Oh, honestly, when it comes to just about anything in life, it's like
yeah,
it's usually an emotional decision does not end well.
no, man, it's especially when it comes to your investment portfolio, or if you're an active trader and you're ruled by fear and greed. Well,
Mhm.
you're a gambler. You're just gambling at that point.
Well, you're
Um,
easy to manipulate.
that
I
too.
mean that's one thing that we learned in the military was when you're developing assets and things like that. When you're trying to influence people, is you get them in an emotional mindset. It's if you can get somebody emotional, they're easily manipulated, and that's what the fear and greed index is. Is it's a measure. That's what the candle charts are. They're a measure of emotions. It's if you actually read up on the history, I think it was a Chinese guy or a Japanese guy that came up with the candle charts, and that's basically what it is, and that's why they have those patterns with the head and shoulders and stuff. It's basically patterns of emotion.
Yeah, there are certain things that play out over and over and over again, certain patterns that repeat, not just in markets, but in nature too. Um, so the reason why I started with the investor mindset course, and, let me see if I can actually share this. I know that the link is in the chat, but I'd kind of like to, oh, I've got to open up my system settings and approve this on Comet. I'm using a new browser here.
Oh,
Um,
gotcha.
yeah, and it's not going to allow me to share unless I quit the call and come back. I think, oh, maybe not. Is it going to allow me to share? I guess we'll see. But I'm just sharing a single tab. I don't know if it's actually working here, Mike. Um, so that one single tab, there we go. Awesome. So this is the investor mindset course. And this is the first in a series of a dozen courses that I'm writing. So I've written so far the mindset course, the liquidity provision course, the money markets course, and the perpetual futures course. And these are, the 101 versions. So, my company is DeFi University. And as I'm writing a curriculum, I'm giving away these 101 courses for free. And once I'm done writing them, all I'm going to ask for is an email address to get access to the 101 courses. That's it. So, this stuff, this is really, really good, Mike. Now, every single lesson in here has an audio podcast overview that you can listen to rather than reading through the lesson. You can also
Well,
watch.
that's great because I've heard some people ask you if you had it in that type of format so that like while they're driving or something like that they can listen to it.
Yeah, man. Well, it's all here, and I'm giving it away for free. So the audio podcast is right here, and this is for every single lesson you can listen through rather than reading through. Or if you're a visual learner, you can watch the video overview of the lesson. And as we go down through, remember this is a draft format. This is like version 2. The first version I published, this is the second version. By the time I'm done with these 101 courses, they're going to be branded. All of the text will be formatted in a way that makes it a little bit easier to read. But this is just a draft for right now. I think it's still pretty damn good. So, but these images, so you've got the audio podcast, you've got the video overviews, and then you've got the infographics also, in addition to all of the written text. And then as we scroll down through and just take a look at this, there are also interactive elements within every single one of these lessons. So let's say that maybe you're going through the first lesson in the investor mindset course and you're learning about risk tolerance. Well, you can go through this risk tolerance assessment. This is just one of the interactive elements in here. So they're interspersed all throughout. Maybe you want to take a trading DNA assessment. So this just makes the content a lot more engaging. Now, by the time you're done going through each module, and there are only 3 modules and 12 lessons in every single one of these courses, the format is exactly the same. So after you're done with a particular module, well, then you can take a quiz on that module. So I've already gone through and taken these, but this is pretty darn cool, So, yeah, that's what I've been working on, and I'm going to be done with all of these first 4: investor mindset, liquidity provision, perpetual futures, and money markets. I'm going to be done with these first 4 probably by Sunday.
Nice.
So, and now Mike, here's something really, really cool about this. So let's say that maybe you've got a question, right? You're going through this material and something's not making sense. You see up here where it says ask?
Oh,
I've got
hold on.
this.
Let me bring your screen back up. There you go.
Yeah, so you see in the top right here where it says ask?
Mm-hmm.
So you can do a bunch of things with this. If I click on more, I could copy the entire page, all of the content on the page, and then I could give it to my favorite LLM model. Or I could open it directly in ChatGPT or Claude. Or maybe if you use MCP servers, you could just connect your proprietary data to this and then ask questions of it that way. Or maybe if you're not quite that technical, you could just use the Gitbook Assistant and ask questions of this. Oh, and by the way, you can also export these as PDFs. So if you want to just save it on your local machine, you can do that too. So here, let's ask the Gitbook Assistant. Let's ask a question. So it's going to always start out by just what is this page about? So it's going to take a look through the content here. Is going to summarize the content. Let's say that you've got a specific question about anything in this investor mindset course. So maybe I'm going to say, how do I avoid falling prey to my emotions? Question like that, and I'm going to hit enter here. And what it's going to do is it's going to go through all of the content in the course, and it's going to let's see, it says, oh, it looks like it lost it there. So I think I hit the wrong button. How can I avoid falling prey to emotion as a trader? Okay, and then let's try this one more time. And what it should do here, and yes, this is exactly what it's doing. It's searching through all of the content, and then it's going to write an answer and reference the lessons that talk about that. So let's say that you want to learn how do you avoid falling prey to emotions as a trader. Well, go ahead and take a look at the exercise for lesson 3, or take a look at the lesson in lesson 3. Okay, great. Here's lesson 3. So now I can go through, look at all these different types of fear. How do I avoid these? How do I avoid FOMO? And by the time I'm done with this, there will also be interactive elements in these lessons too. So, or you could take a look at the exercise. So every single lesson also has an exercise associated with it. So this is really, really cool. And once you move on from the mindset stuff into liquidity provision and money markets and perpetual futures, as you start to ask questions of the Gitbook assistant, dude, the answers that you get are really, really good because the course content is really, really good. It's like PhD level course content, but made simple to understand for beginners. These are all the 101 courses. Now, the next courses are the 102 and the 103. So, think of it this way. If you're going to university and you're just starting out, you might take a 101 course, a beginner course. But then as you become more advanced and you build your skill set, then you take a 102 course or a 103 course. You see what I mean? Something like
Mhm.
that. So, yeah, this is what I've been working on, and I think I'll have the first 4 done by Sunday. So
Nice.
yeah, man, this is pretty cool. Now I've also been working on. If I just stop sharing that window for a second, I've also been working on some content around liquidity provision and some like high level liquidity provision topics. Um, in fact, I just finished building a little web app calculator that would help us to understand some of the concepts that I walked through today during the live call in DeFi University. Um, I don't know if you want to go through that stuff, Mike, but we
Yeah.
definitely
No,
can.
we can go through whatever. Like I said, I
Yeah.
mean, this is this show's all about just diving deeper into just more advanced aspects of DeFi, rather than just staking, lending, simply entering a liquidity pool, things like that. So
So I don't know if I can share video content on here, but I
you
just
should be able to.
uploaded, yeah, I just
As long as
uploaded
it,
a
as long as
short
it plays on your
video.
screen, it should play on here.
Yeah, there it is. So that video, um, this is only 2 minutes long, and I think that this is a pretty good starting point because then I've got a slide deck and I've got an infographic. The infographic is really, really good. Maybe we should start there and then take a look at the slide deck. So let me just grab that infographic real quick, and then we can move on from the infographic to the video because I can just describe the infographic in a couple of seconds.
I'm
Um,
really enjoying these markets moving
oh yeah, they're a nice bounce.
a little
Um,
bit, little bit.
yeah, BTC up above 90,000, and ETH back above 3,000.
I would love to just see it hold here for a minute, just to kind of get some confidence back in the markets, because I have a feeling if it doesn't hold this, or if we get a larger pump, that the confidence isn't ready for it, and it would be fragile. And if it did start going up, all it would take is one little hiccup and people would freak out.
Yeah, man. I mean, it looks to me like a lot of the rally that we've seen over the last couple of sessions, it could just be due to that rate cut in December getting priced back in. That's what it looks like anyway.
Some of
One
that,
of the factors, yeah. So I'm just thinking, is that sustainable? Is a rate cut in December and the bounce that we've gotten on the back of it, is that enough to carry digital assets back up to fresh all-time highs? Maybe over the next couple of months. Um,
I think Q1 of next year, if we're going to get a move, back up, to new, all time highs and stuff, I don't think it's going to be until Q1 of next year, with the holidays and just everything that's going on. And I hope I'm wrong. I'm going off my gut on this. I mean, I'm not backing this up with any data or charts or anything like that. I'm just purely going off of how what I see in on social media and what I see on across different charts and my own portfolio and just kind of how the markets moved and sentiment in our Discord, kind of how people chat in there, just kind of finger on the pulse, is kind of what I'm going off of. Lick my finger and stick it in the wind and see which direction the wind's blowing, that kind of thing. But that's what I see is either we're going to get a big rally in Q1, or it's just going to be a slow, gradual climb from here on out. And the days of parabolic moves are over. One of the two.
Yeah, I kind of think that this rally is going to fail. Um, that's I maintain my shorts actually. So as ETH has been rallying, I have become more short. Um, so the levels that I'm watching for Bitcoin, the first level of resistance is around 94K.
Mhm.
So I think Bitcoin could definitely move up to 94. A more important level of resistance is around 102. So
Yeah.
the big thing for me is Bitcoin bounced off of a level that is just kind of random. I mean, if you look at a chart of BTC, it's like
Yeah.
it came down into like no man's land. You had real support at 75K. You had that
Mhm.
trend line breakdown at roughly 94, 92K. And now
And
that
it bounced at
that
like 80.
it bounced at 80. Yeah, it's like why bounce at 80? Well, it looks like it bounced at 80 because the New York Fed Williams came out late last week and said, "Don't you worry, everyone. We're gonna cut rates in December." And so the markets rallied on the back of that, and Bitcoin found some support at 80. But I don't know. It looks to me like unless Bitcoin can regain 109, that's the 200-day moving average.
Mhm.
There's a long way to go until we get up to 109. That's $20,000 away. So I'm just thinking, well, if Bitcoin doesn't break above 94K resistance, then it probably tests 75,000. So I'm maintaining my shorts, but I think the 4-year cycle was never a thing, and I never believed it ever. And I think that Bitcoin is just another financialized asset now. And so
Well,
that means,
I would agree and disagree with that because I believe that the 4 year cycle is a thing, but the 4 year crypto cycle, I think all along Satoshi just happened to align, not happened to, he purposely, or they purposely aligned it with existing cycles. There was never a crypto cycle. It's just the debt cycle, just the normal, sine wave, that goes on that you see in the markets. It just happens to align with that. That's always been kind of my thought, but
yeah, I
I'm not like a in depth expert on the subject. It's just that's kind of in my limited understanding.
so, when I think about Bitcoin, it is, a software, basically. It's cryptographic software. Um, and like when it was first launched, it was very, very small, right? You didn't have monetization until Pizza Day. So you've got this very, very small, highly speculative, extremely volatile, new emerging asset class. And you've got these much, much larger asset classes that push it around. And I think that the 4-year cycle that people have looked at, the halving cycle, all the analysis around it, it looks so much like curve fitting to me. And it's so difficult to pull a signal from it. But you know what signal was pulled from it is the number of days from each trough to each trough and each peak to each peak.
Mm.
And Jake actually sent to both of us via text at the beginning of October that post that some anonymous user made on some forum somewhere saying that Bitcoin's going to put in an all-time high on October 6th and the cycle is going to repeat again. And hey, guess what? It's been right so far, man. But I don't believe in the 4-year cycle at all, because
Man.
there's no predictive power there. It just looks completely random and like people just fit it to their own curve, and that's not useful for me. But when I
Well,
look at it,
well,
yeah,
back to the emotions. I mean, honestly, up until recently, when institutions were legally able to get into the markets, for the most part, it's been driven by retail, which is highly emotional.
yeah,
And so, I think that, you're right to the point to where, whoever was, kind of, driving the markets, the market makers and things like that, they somewhat fabricated that cycle, because if everyone believed, that 4-year cycle, it was very easy to fleece people. It was very easy, with everybody flooding in thinking that, here comes alt season. It was really easy for, Bitcoin to get that all-time high and everybody's like, all right, here comes Ethereum. And then, Ethereum kind of fizzled and then like, oh, well, maybe it's going to be a little bit different, and it's just, you could almost see the liquidity being extracted from the market, because the big money and the smart money, knows how to do that.
So there are unique properties about the Bitcoin has that no other asset has.
Hmm.
It is a truly decentralized, truly non-sovereign digital bearer asset with no counterparty. So that is unique,
Yeah.
but it's also a relatively small emerging asset class when you compare it to, you know, equities, global equities, the global bond market, like a global interest rate market. Like digital asset markets are very, very, very small. So I think that they, are mostly affected by user growth, like adoption rates, and just general market liquidity dynamics. So when I zoom out and I think about this, I think, okay, well, all of these bulge bracket banks in the United States are about to allow custody of digital assets. Like
Mhm.
imagine like you've got a B of A account and you log in and you check your ETH balance, you know?
A couple of them have already launched where you can custody, they'll custody your Bitcoin and your ETH. And I think it was JP Morgan Chase said that they're going to allow people to take out loans against it and stuff.
Right. So that's adoption. That's
Yeah.
like major
Like
adoption,
real adoption,
like
not
real
just,
adoption.
not just if, or maybe, or they're in talks or, anything like that. I mean, that's like
Right.
actual real,
Right. We got
and
a partnership. Yeah, we got
yeah,
a
yeah. It's if I hear see another post about a partnership and
right.
boom, I'm gonna just, if I ever make a bunch of money in crypto, I'm just gonna buy a plane and fly around and slap people.
Uh, a partnership. Yeah, XRP is very,
I
very good at
hate
that.
that.
Yeah, they make the best partnerships. It doesn't actually turn into anything real, but great partnerships though.
Well,
So
that's why I love data. I mean, social media posts and that hype, that's playing on emotions. That's getting people emotional about their investment. Whereas if you look at data, I mean, there's multiple websites you can go to and look at actual data. And the project we're talking about that shall not be named, it's flat. I mean, I've showed multiple people, there's no adoption. It's, the burn rate's going down. It's just, I mean, there's no data supporting growth. The only thing growing is the company that basically controls the asset. And yeah, they're going to do great things, but that asset isn't. So
Yeah, but it's like they've been saying that for 10 years and they haven't
yeah,
shipped anything.
yeah.
So it just it smells funny to me. It seems like there's something wrong there. But the good stuff about the
Stan,
banks,
I said
yeah,
they
I
shall not
know.
be named.
They
I
sh-
said they shall not be named, Stan.
Oh, don't do it, Stan. Uh, but dude, the banks though, like if you can custody digital assets at bulge bracket banks, that's massive adoption. And then all of these neo banks, they're going to start banking the unbanked in Southeast Asia and in APAC, that in that region. There's like
I was
1.5
actually
billion
just on a
people.
Mario New Fall. I've been on a couple of them the past week or two. And one of them we were talking about neobanks, like SoFi and EtherFi and things like that. And they're flipping the old school banks on their ear because
Yeah.
I mean, people, if you have a choice of being in a traditional bank and earning nothing off depositing your money there, having to go in the bank and apply for a loan and jump through the hoops and do all these different things, or you can go for someplace like EtherFi or one of these DeFi or neobanks, and you can take out loans against your assets with a couple of clicks, with
Oh yeah.
smart contracts. You can from your phone, like you said, in sub-Saharan Africa, you can be freaking doing DeFi, you know, while you're doing whatever you're doing there, like, protecting the freaking elephants or something. It's just, why would you use a traditional bank?
Yeah, or poaching the elephants. I mean, I don't know which one they do more of there, but like, so
I tried to go with the positive
I
aspect.
know, I
I
know.
didn't want to be the go on the negative side. So
I hear you, man. But it's like, so there are two things, two reasons why, you know, this cycle, uh, and I don't want to even use the word cycle because I don't think it's real, but I don't think that Bitcoin just all of a sudden is going to experience, an 80% drawdown. I don't think that all of a
no.
sudden we've entered this deep, dark bear market. And there are two reasons why, two big structural reasons why. Number one, the adoption as banks allow retail customers to custody digital assets in the United States and maybe in other jurisdictions, I think that will drive significant adoption. I think the neobanks are going to drive significant adoption. So, user growth. So, that's number one, big user growth. Number two is I think there's a structural bid under all markets because of this fiscal dominance in the United States and in every developed nation. So, what the hell does all that mean? Well, basically, money printer go burr is about to happen again. That's like in layman's terms, I guess, is how I would describe it.
Well,
So,
the other bullish thing that just got announced is the Fed chair. Trump came out and said that they're definitely replacing Jerome Powell as the Fed chair, and they named a couple of people that are in the running, I guess. And I know that's when the market started moving, this last time that we're experiencing right now.
yeah, so we've got two things, right? We've got all of this adoption that is going to, drive more users, and then we've got this structural bid underneath everything because the deficits are growing faster than the economy is. And
Hmm.
so that means that the administration, the Trump administration, has no choice but to aggressively expand credit creation to try
Yeah.
to goose the economy. Besant and Trump have a really difficult job ahead of them over the next couple of years. They've got to get GDP up as
Well,
high as they possibly
well,
can.
well, to simplify what you're talking about, so for some of the people out there, and myself included, I mean, I've learned a lot from you and Taylor and the other people I have on the show. But what David's saying is that with rates high, with interest, with what they charge for loans high, businesses do not want to borrow. And the way that businesses grow is they borrow money. That's how they hire new people, and they buy new equipment, and they get bigger facilities and expand and do all these different things, is by borrowing money, because borrowing money is a tax deduction. It's a debt. So it keeps their liquid assets, liquid, where they still have those available and they can borrow if the rate's right. They have their bean counters that make sure that it makes good business sense. But rates have been so high, nobody's been borrowing. That's why unemployment's going up. That's why, we're kind of contracting. The job market, everything is contracting, and the debt is going up. And that's what David's talking about. Sorry, go ahead.
Yeah. So that is definitely a piece of it. 100%.
Mm.
Businesses being able to borrow or not. Now, I would actually say that rates are very, very low, historically speaking. But the problem
Historically,
is, right. But the problem though, Mike, is that there's
but we've
38
never had the debt
trillion.
that we have.
Right. There's $38 trillion in fucking debt. Like
Actually, we hit
at
39.
39, like, dude, these numbers are just so big. And the
They
US
don't like they're
government's
nonsensical now. I mean,
like,
it's just like,
well, the problem is the deficit spending, like borrowing to hand out free stuff. All of the entitlement spending, like Medicare, Medicaid, Social Security. All of those entitlements programs. The federal government is borrowing to fund that stuff, and the
yeah.
deficits are like 7%, which is like wartime level. But the federal government's been running wartime level deficits since COVID.
Hmm.
So, like, this will lead to the destruction of the purchasing power of the US dollar. That is the only outcome here. And we've seen that, since 2020, prices for everything are up 100%. Go to the
Hmm.
supermarket, you need a
Oh,
$100 bill to be able to buy milk. You know what I mean? Like, not quite
don't get
like
me
that
started.
extreme, but
I mean, I buy some pretty nice groceries, but what used to cost me like maybe just over $100 for a week's worth of groceries just for me. Now, I mean, shit. The other day I went and I bought some higher end stuff, like laundry detergent and stuff that you buy occasionally, but it all happened to be on that one trip. And I went over $300 for a week's worth of groceries and some odds and ends stuff. You know, it's it's crazy,
so
and nobody's wages are going up.
right. See, that's the thing. The federal government is borrowing these massive deficits, the massive deficit spending. And in order to borrow, well, they've got to sell bonds in order to borrow. So they create this credit. That's US dollar liquidity additive. It increases the money supply, which leads to inflation going up. Now, you might think, oh, well, David, I saw inflation is going down. Well, yeah, but that's the inflation rate, like an annualized inflation rate. So if you look since 2020, prices have gone straight up, but the rate of inflation over the last couple of years has come down. It's still inflating. Inflation is still above 3%, and depending on how you measure it, it's probably well above 3%. The CPI, the way CPI is calculated, it's done in such a way as to make the number whatever the incumbency wants it to be.
Well, I
So
I know what's been. I mean, sorry to cut you off, but I know what's been helping me, and I know a lot of people out there. I mean, there's a lot of shows that are on every morning, and they go over the macro and they talk about a lot of this stuff, and I know a lot of people are looking for a lifeline. So I mean, if
I
we
can
could,
share that. Yeah, I
well,
can
yeah, and,
share.
and that's kind of where I want to shift to is I'll really quick. I'll kind of share the little bit that I'm doing just to kind of augment my income when needed, and when I don't need it, it just goes back into DeFi and back into crypto. But for the most part, I have just a small portion of my portfolio in lending, staking, and full range pools that's earning me right now about 40-50 bucks a day of just passive, income that are, just, basically it's a flow of money that I just let grow. And if I need it, if my bills or whatever are more than I expected, or there's something unexpected, then I pull that out. But otherwise, I just let it go back. I just did another arrow lock off of, basically OP, what I call OPM.
Arrow. I love Arrow.
I know you
have
do.
seen I have seen the
I
light.
converted you. I converted you. I put the hands
I did.
and healed you.
I was baptized. I was baptized
Yeah.
in the pure waters of the arrow.
We actually did a really good episode last night and went
Mhm.
over a lot of the stuff. There was some new stuff that came out, and part of it was the tokenomics, or some of the tokenomics and the mechanics of the new platform, and kind of how it that's going to work to get to achieve some of the things that we talked about on our last episode. But I mean, what are some things that
Yeah.
you're doing?
So
I mean, I know that you
I'd love to
live
share.
off of your DeFi.
I
So,
do.
I
I
mean, what
do.
have you done personally? I mean, have you found ways to offset inflation by adjusting how you do your DeFi?
I wouldn't necessarily say that I found a way to offset inflation, but I have definitely found ways to generate a lot of yield, um, and do so without having as much directional risk. So,
Mhm.
Mike, you see that infographic that's I shared? I don't know if you can add it, but I want to talk through
Yeah,
that
hold on one
because
sec.
this this I think will really help explain like how I've been able to be so successful as an LP. And so I do on average between $500 and $1,000 a day as an
Mhm.
LP, and I'm hedged. So I'm doing this in ETH. So like, hey, if ETH is down 1,000 points tomorrow, great, that would be awesome. Um, if ETH is up tomorrow, great, awesome. The direction doesn't matter as much. So let's talk through each of these items. I know that they might be a little bit difficult to see in the image, but number one, okay, so what is this? Well, liquidity provision is not a source of passive income. What you're doing as an LP is you're short volatility. Okay, so this could get really complex really fast. I'm going to do my best to keep these concepts as simple as possible. So, um, the first thing is you have to ask yourself, if I enter this LP, if I enter this pool, what's the likelihood that I'm actually going to be profitable? And what do I have to assess to know if I actually have a shot at being profitable in this
I,
pool?
I use metrics. Just the metrics finance is what's helped me because yeah, there's definitely ways you can calculate that, and it does a great job simulating those positions.
Right. So, metrics is a great simulator. In
Mhm.
order to determine if we have a shot at being profitable, we have to do a little bit more than just simulate our yield. What we have to do is number one, we have to understand this concept of expected value. So, when we provide liquidity, what we need to do is find out if the pool and the range that we set in the pool based and the volumes that are flowing through that pool, if all of these things together and the volatility of the underlying asset or assets, we have to take a look at all of these items together and use them to figure out if we are going to have a positive expected value or not. So what does that mean? Well, the expected value is it's going to tell you whether you're likely to be mathematically profitable over the long term. So if you have a positive expected value, then you enter the position. Well, how in the world do you calculate if you have a positive expected value or not? The first thing that you need to understand is volatility. So volatility is the cost that you pay as an LP. Because remember, as an LP, you are short vol. So if you're short vol and the cost is the volatility, then the volatility could be thought of as your divergence loss or your impermanent loss or your loss versus rebalancing. Those three terms all kind of mean the same thing. Lever, divergence loss, and impermanent loss, they're all kind of the same thing. And what they describe is the cost of staying in a pool. The cost is the vol. So the volatility is the cost. the higher the volatility, the more you must earn in yield to even have a shot at breaking even. So as these assets become more volatile, you must earn exponentially more in yield to even be able to break even. Okay. So
Mhm.
the first thing is, as an LP, we've got to figure out, are we likely to have a positive expected value or not? And in order to calculate that, we need to understand volatility. So you need to know, what is the volatility of the underlying asset. That's the first thing that you need in terms of like your data points. Okay. So you can go and get volatility for an underlying asset. Let's say that you're trading ETH, right? You want to enter an ETH USDC concentrated liquidity pool on Uniswap. There are a couple of ways to get a volatility reading. You can use TradingView and you can use historical volatility over the past year. That's one way. What I prefer to do is to use Deribit. Deribit is the only like crypto options market that's actually liquid, and you can get implied volatility. They call it DVOL over on Deribit. I think that's probably the best metric to use. So go to Deribit, get the DVOL metric for Ethereum. Okay. Once you know that, you can plug that in, and I'm going to show you the calculator here in a second. You can plug that in, but you need a couple of other inputs. The next input is, you need to know, how wide are you going to set your range? And to help you set your range, again, you need volatility. You need to know the volatility of the asset, because that's going to help you figure out what's the expected move. Expected move is going to tell you what the likely move, either up or down, for a particular asset is over a specific period of time. So it would be something like this. The expected move for Ethereum over the next 24 hours is plus or minus 4.5%. That would be an example of expected move. So if you know what the expected move is, you can use that to help you set a range. So let's say that you set a range that's plus or minus 10% wide. Okay, great. Now you've got your range set. You've got your implied volatility metric that you got from Deribit. You know the width of your range. The next thing that you need to figure out is, what is your break even point? So, yeah, go ahead, Mike.
Oh, I was gonna say, do not let me forget, what time is it?
Oh
I gotta
yes,
vote.
don't forget to
You
vote,
know what?
man.
Let me vote real
Yeah,
quick, so I don't forget. Let's do this because
you
and
wanna
Jason,
you wanna vote live? Can
yeah, I'm
you?
gonna vote live. Yeah,
Okay,
I'm gonna show people what it's all about. But
awesome. Here,
Jason,
let me
type in the
stop my
chat
share.
what your question was, and I'll answer it here real quick. So this is the voting. So you can see, I'll show you my locks real quick. I'm very transparent about my portfolio. So I only have one lock. This is my original lock that's not in the relays. I put all my others back in the relays because it seems like they just earn better in there. And I'm holding Arrow long term. You know, with the new platform coming, and the way that Coinbase is planning on integrating it, and the institutional LPs that are going to be in there, it's just, there's way too much going on. So I'm bullish long term. Put my money where my mouth is, but this is the lock that I'm going to manually vote with. So you come here to vote, and as of right now, this is the VAPR, or the voting APR, that you can get on these, and you can sort it. The best right now is wrapped ETH, and I've never heard of this bid. If you're going to sell it right away, it kind of doesn't matter. ETH, I'll probably keep, but the bid, if it's, doesn't look like a promising project, I'll probably just sell it. And then I have no idea what this Woo is or anything. Syndicate, I got before. It really didn't do much. Might be a good project. I don't know much about it though. Mog is a meme coin, not interested. BMX, I think the same thing. AAA is Arcadia Finance, DeFi platform. I actually have a little bit staked. Wouldn't mind that one. That's 32%. But basically, let's refresh it one more time before I do this.
So Mike, some of the protocols,
Mhm.
they sometimes incentivize or bribe their
Yep.
their voters, but they don't always incentivize or bribe with their own tokens. Sometimes they'll bribe with stables or with Arrow or
Mhm.
with something else.
And
So
and they do that here. Like actually here, let me sort this and maybe there'll be a couple. So this one, it looks like Syndicate is using their own token, but this one, USDC and Check, they're actually incentivizing with the Check token and a little bit of Arrow. You know, anybody can incentivize and deposit tokens, to try to get people to vote for the different pools. So you're right, David, 100%. You can, put, I mean, there's a bunch in here that there's just USDC, and USDC isn't one of the assets. So,
right.
um, let's see. This USDC check, it has some good incentives and a decently high VAPR. So I think I'm going to go with that one because I'll get this 32.77% plus I'll get a very small part of these incentives. So let's go and do that. You see, I already got it pulled up. So my estimated rewards will be about 23 bucks off of that. So then let's go ahead and vote. Now, I think the question that Jason was asking was, what happens if I split it between different pools? So if I did like 50% on this one and 50% on another one, basically all that's going to happen is instead of making the $22.89, if I only use half of my voting power, I only get half the rewards. So I'd get $11 and 44 cents, roughly. And then whatever else I voted for, so if I voted for this one here and did the other 50%, then say I selected that, so see, it has both of them pulled up. So if I zero this one out and I say, okay, I'm going to do 50% here and 50% here, you can see this one, I'm going to make $11.32. And this one, I'll make $9.49. So you can do that if you want. But, me personally, I just, go with the one that's going to earn me the most because, do the math. It's not much, but it's like a dollar or two less by splitting it like this. But by all means, you can do whatever you want with it. So I hope that answers your question. But yeah, the epoch ends in 7 minutes. So make sure you vote. And yeah, and if you had done your lock of 2,500 Arrow or more uh, before last week, you should either have already gotten or be getting very soon your flight school bonus. I got mine earlier today. So, all
So
right.
I'm curious, the flight school bonus, how many, what's the percentage of it now? Because it changes all
It
the time.
Yes. And so the first time I did it, I got like 50%, which was huge. I mean, because it's just, basically for whatever you put in, you get, I put in a 5,100 Arrow and I ended up getting like 2,600 free Arrow. I mean, that's huge. But this last one I did, I put 2,500 in and I only got 385. So it was roughly 15%. So it varies. And the more people that do it, because it's not like they just print a bunch of tokens to make sure it stays at 50%. There's only so many fees that were generated by the platform with people swapping and stuff. And so there's only so much to go around. So depending on how many people are locking, if there's less people locking, then there's more fees to go to those people that did the locks and that are getting the flight school bonus. If there's a ton of people doing it, you're going to get a less of a portion, because your percentage is what is getting you that bonus. So
Yeah,
just like with
because
voting.
yeah, about maybe a year ago or so, maybe something like that, year and a half ago, when I was running this strategy, the flight school bonus was like a double up. You know, It,
Yeah.
so yeah, it's definitely come down over time. But the strategy that I was running then was, enter a lock, get the flight school bonus, immediately sell the flight school bonus. And yeah, you end
Sure.
up taking like a 30% haircut on it. But hey, you know what? works pretty well. It worked pretty well when the bonus was like 100%, but with a
Oh
fifteen
yeah, no, and
percent,
and it's free money. I mean, it was and so yeah, no, it's there's a lot of people that kind of, I don't know if that'd be considered arbitrage, but plenty of, they gamify, the the whole process. But and there's a market for buying and selling locks. You can, if you need money, you can sell your locks. You're gonna, like you said, take a haircut of anywhere between 10 and 30%, but you can make that liquid to use it. And the new Aerodrome platform is actually going to have that integrated into the platform. So there's a lot of really cool stuff coming with that new platform. Like I said, we did a really good episode, me and Jeff, last night, and just went over all the documentation, straight from the Aerodrome website. And just, it answered so many questions.
that's pretty cool, man. So maybe changing topics here a little bit. Have you learned anything about Monad? Didn't they launch the other day?
Yes. So that was Coinbase's first, kind of, their new pilot program where they're going to be launching tokens, straight from, their platform. And Monad was, kind of that launch, and it went okay. It was not a gangbuster launch, but it did pretty well. And let me see if I can pull up Monad.
I'm just curious because I know that Coinbase helped to launch the token, but since Coinbase is so tied up with Aerodrome, maybe there are pools that contain the Monad token on
That
Aerodrome.
that is basically what's going to end up happening. I mean, and I'm glad you brought that up. So, um, a lot with the new Aerodrome platform and Coinbase's relationship with Aerodrome, I definitely see a lot of integrations happening. And Aerodrome already has I think they call it Launchpad or something like that, where you get extra incentives for voting for new tokens that need liquidity, because there is no pools to, provide the liquidity for swaps and things. So basically, it's a way to incentivize people, that have locks to provide that liquidity to those new tokens to, jumpstart them, Launchpad.
So Mike, I want to make sure that I understand what you're saying, right? So, are you saying that Monad, the protocol, is bribing on Aerodrome? Is bribing
They
LPs?
I have not seen on Aerodrome. I'm saying that the new platform, I see that the new platform would potentially be doing that. Syndicate was the first one that I saw on, and somebody in our community told us about it. But it was 2 or 3 epochs ago, and basically it was bordered by like a green halo or a blue halo, and it says Launchpad or something like that. But basically, what it is in that case, yes, Syndicate, contributed a bunch of tokens to incentivize people on top of the VAPR to kind of sweeten the pot. Where but Coinbase, I have not seen them do that with Monad.
Yeah, so that's something that when I was more active on Aerodrome, that was something that I would always look for because of overnight finance. I mean, yes, overnight ended up blowing up, but they blew up because of the bribing on Aerodrome. They
Mhm.
blew up because they were incentivizing LPs to the tune of like $600,000 a week, and they
Mhm.
couldn't keep that up forever. So
Yeah.
the bribes plus there were like $7 million in levered positions on XtraFi. So the combination of overnight finance saying, "Hey, we're not going to continue bribing anymore," and the unwind of those levered positions on XtraFi, I think those two things together crashed the OVN token. But it's always been something that I watch for. Are these protocols bribing LPs? Because if they are, then that could be a really consistent source of yield. So
Oh yeah, yeah, and I don't I think that the ones that are happening on Aerodrome now, Syndicate and Check, it looks like they must have allocated tokens because these are the two that I've seen on the launch pad so far is Syndicate and Check, and it looks like both of them are still incentivizing. Oh, here,
gotcha.
right here, Syndicate and Check. So not quite sure,
So what's the name of that dashboard for checking different metrics? There's like an aerodrome flight school dashboard there. I don't recall the name of
Oh,
the.
Dune Analytics.
Yes, thank you, Dune. If you go to Dune, there's an aerodrome dashboard that will allow you to track the bribes.
Yeah, and for whatever reason, I don't know what the deal is, but my Dune dashboards, like none of them freaking work. Like
It's
I'll show you
probably
what
your
I get.
browser. Yeah, it's probably your browser.
So yeah, see, I get this is what I get is error fetching results failed.
Okay, so what we're looking for here? Oh wow, yeah, it doesn't work for you.
No,
Mike, it's
and
probably
it's
your
not just
browser.
this one. If I go to if I go over here to the VE Aero Rewards program that goes over the flight school stuff. Same thing. Error
Yeah,
fetching results
try.
failed.
So, which browser are you using? Chrome or something else?
This one I'm using Brave, but I can try Chrome.
Yeah, if you try using Chrome, I bet you it'll work.
I seem to think that I tried that because I've been trying to get this to work for a couple of weeks now, and it sucks because I'm supposed to be the one knowledgeable about this stuff, and it's like the only source. Like even Aerodrome points people to these dashboards.
Well, look, it's a great
Yeah.
dashboard. Yeah, they built a couple of really great dashboards here on Dune, and
Oh, and
if you
there's one that will that I was using forever that basically breaks it down like all the data for each individual pool and each epoch, how many votes it got and how much it earned and I mean just in-depth data, which I
yeah
loved, but again, I cannot get it to work anymore.
yeah, so if you when you get this working for yourself again, that Dune dashboard is really valuable, man.
Absolutely.
Yeah.
All right, well let's jump back over to what you were saying and finish that up before we close this out. I just wanted to make
Um,
sure that I got that. I promised Jason I'd do that.
Yeah, so here, let me go ahead and see if I can share another tab. I want to share this calculator that I built here. So big shout out to Stephen TCG. He came up with this idea before I did. Um, but what this is doing is this is going to calculate whether I have positive expected value as an LP or not. And here are the inputs. So remember that first input was volatility. So I'm using implied volatility here. And the input that I'm using is from Deribit. Oh, you can't see that tab. But the implied volatility, according to Deribit, is sitting at 72%. Okay. Now, the range that I set here, I'm just going to go with
How do you spell that dairy bit?
Deribit,
All right.
deribit.com.
All right. I'll just so everybody out there can bookmark that.
Yeah, for sure. It's the only liquid crypto options market outside of like the CME. Um,
Mm.
there are a couple of decentralized, DeFi options markets. You've got Avo and you've got Derive, but the spreads are extremely wide and they're not liquid. And when things start moving, the market makers there just step away, so you don't have a market at all. So you can't really trade like that. So in the
There
calculator,
we go.
the first input is implied volatility. So I'm just running with ETH here, so 72%. The next input is my liquidity range. So let's say I want to set a range that's plus or minus 10% wide. And my estimated fee APR, if I'm plus or minus 10% wide, maybe let's say something like 90%. So I just plugged in my inputs, and now I can scroll down. Oh, it looks it's not calculating. So I probably need to hit reset, or let me just hit refresh and see if I can get this working again, because I haven't published this yet. So yeah, so what you're looking for, you see down here, so you can calculate the minimum APR that you must earn in an LP just to break even.
Hmm.
So if you know the volatility of the asset, so let's run with 72%, you know the range that you want to set, and you know your estimated fee APR, well, then you can compare it to what is required for you to break even. So if you can't do 127% out of a position with these parameters, then you don't have positive expected value, which means don't enter. So that's pretty
Do
cool.
not enter.
So let's say that maybe your expected fee APR is 150%, and you've got a slightly more narrow range. Well, it's very getting closer. What if you're doing a little bit more in yield? What if volumes are up? Look at that. Now all of a sudden you've got a little bit of a positive expected value there. So this is pretty cool. This is pretty cool. And I'm going to integrate this calculator in and a bunch of other calculators in to the liquidity provision course, which I should be done with, by Sunday, I think. So,
So David, without looking at what this asset is, looking at this chart, would you say like this is when this token launched? What I mean, what would be your impression of the performance of this token?
um, so what's the scale? What scale are you using?
15-minute candles.
So over on the right, though, is this linear or log?
This is, I believe, log.
Usually by default, it's linear.
Okay, then it's
Um,
probably linear.
Yeah. So, just look. This is what Monad. Just looking at
I said,
this.
don't look.
Yeah. I mean, like what I see, and I can't draw on this, but what I see is, a level of like upsloping trend line support. Um, and I see that that was broken. But the reason why I asked if it was log or linear is because after launch, tokens like this, when I
Mhm.
look at them on a logarithmic scale, I'm looking for a specific type of pattern. It's like this S curve pattern. It looks like
Ooh,
two messed up C's on top of one another.
actually, I want to freaking get your input on something because this was something that we ran across on the new Aerodrome platform last night, but also on Amaro New Fall I was on. There was a company that was dealing with this issue as well. Is basically price discovery. So I'm sure that you're familiar with usually when tokens launch, especially if there's VCs and team members and they vet, they're already vested. You get that pump and then the dump, and that you get that kind of what almost every token does if it's not a fair launch. So they are starting auctions. So there was a company that I was on the show with, and they're doing it as a service, and basically to where they're able to establish price discovery before the token is launched through auctions, MEV auctions. And then the Aerodrome platform and Coinbase, with their the way that they're going to start launching tokens from the base network, is going to be using a MEV engine as well, and doing MEV auctions. So it's going to make for a much smoother price discovery prior to launch, so you don't get that crazy volatility where potentially you're buying it at a high valuation and then the price ends up settling at where you've lost like 80 or 90% of the value because of that the kind of how tokens usually launch. So I mean, what are your thoughts on that?
So is that like another way of valuing these pre-launch tokens, the auction method? Because there are a couple of protocols that do that right now. I just
Yeah.
don't know how they price them. I don't know if it's an auction or something else.
I don't know about those other platforms. I just know that I want to say it was like BDG or something like that. I might have saved the website, but that's the one that was on the Mario Nufal show the other day. But and then the one I'm talking about more directly is Aerodrome and Coinbase, and the way that they're going to be doing it, which is again through auctions and so yeah, I mean, basically, it's just going to be like a straight up auction to where people can bid for tokens, and the bidding is what determines the value of the token. So you're pre-buying the tokens through bidding, and it's going to I think make a flatter a flatter launch. I'm sure that there'll still be volatility, but it feels like it would be a much flatter launch. A good example of that one is Monad. I mean, look at this. I mean, this is a lot different than most tokens you see during launch. Like, let me see if I can pull up another one that I know had a lot of VC money in it. So here is VVV or Venice. And this one, yeah, look at that. So you can see it launched, it shot up to like over $22. And then all the VCs and everybody that was in it sold off. So if you bought anywhere between like here and here, this whole freaking range, you're at a terrible loss right now. So this is what these MEV auctions are gonna mitigate. I'm sure not eliminate, but mitigate, which
Yeah,
I
so
think is a beautiful thing.
there are two protocols that allow you to trade these pre-launch tokens right now. There's Avo and then there's Whales. Those
Okay.
those two. Um, but it'll be interesting to see if this auction method. And number one, I don't know the method that Avo and Whales use, but it'll be interesting to see what happens. Um, if it flattens the curve, so to speak, a little bit on launch. But I don't know. Usually I don't trade these pre-launch tokens at all.
I don't either.
Um, yeah, yeah, a lot of people do. A lot of people do,
No,
though.
no, and that's the only reason I bring it up is, I think it's gonna be very beneficial to those that do and those that want to get in early on some of these projects and not get burned. Because I mean, I just gotten into the habit to where I wait for all of this BS to play out, and then after it kind of settles down and you kind of see that it's somewhat finding some kind of support, then it's like, oh, okay, maybe now I'll buy in if it's a good project. But
So
yeah.
that type of volatility on the launch, I have experience with the Trump coin, and
Oh,
a couple of other meme coins as an LP on the launch day, and I've had great success doing that.
oh yeah. No, yeah. I
Um,
mean, if you're trying to get, people are trying to swap to get the token and, things like that. If there's a huge amount of mind share, like the Trump token or, somebody like even Monad, I'm sure if there's some LPs out there for Monad, with the, kind of the hype that was going on with that, yeah, you can get when the markets pump and you start getting
yeah,
a bunch of volume and
it's the volume. When the volumes on a launch day like that are just through the roof, it doesn't
mhm.
really matter if it goes up or down.
Yeah,
Of course, if it just goes to zero, that's obviously not good. But when
yeah.
the volumes are so high, like Trump, for example, I entered Trump Soul on the launch day, and I did 40% in like 6 hours, like on the entire position, just because the volumes were like I was doing like 5,000% fee APR or something like that. So it didn't matter that the token dumped. I was, only in the LP for like a couple of hours, but yeah, if there are pools that exist for those other tokens, it might not be a bad idea. Oh, looks like
There you go.
there we go. We lost you for a second.
So it
So
was you that sucked the liquidity out of the market.
yeah, it was me. I wish, man. I wish. I think that when we're talking about an individual sucking liquidity out of markets, probably got to figure out who that person was on October 10th who got short to the tune of like $1 billion.
Yeah.
That individual or group of people, whoever it was, they're responsible for sucking liquidity out.
Yeah.
Um, so yeah, I wish that there's a famous guy on CNBC who appears all the time. He's a permable, and he owns a very big treasury company. He refused to name names the other day around that on CNBC around what happened on October 10th, and I think that that's a shame. I think that that needs to be called out
Hmm.
because Binance is responsible for October 10th. And
In a lot of ways, yes.
I mean, look, like you even just dig into it like a little bit for like 10 minutes, and you'll see, oh, well, like that was 100% their fault. Like
Yeah.
it was a direct attack on Binance's margining system, and their margining system failed, and 2 million people went to zero because of it. So, like, I
Well,
think we need to.
and the really shitty thing was that a bunch of people that had stop losses the stop losses didn't trigger.
I think that we need to call a spade, and we need to name names when it comes to something like that. And bad actors in this space need to be removed, man. Like you can't have half of the crypto market trading volume flowing through an entity that is not a force for good. So yeah, and then to see him get pardoned a couple days later, it was like, ugh. you
Uh,
know so
yeah.
but I mean, at the same time, who knows who was actually responsible for it. But
Mm.
I mean, look, their
It's not
margining
a good
system,
look. No matter what, it's not a good
it's
look.
not. The optics are bad. Like, USDE depegged only on Binance. The
Yep.
BNB collateral and the ETH collateral, that was only a Binance issue.
Hmm.
But it spread like wildfire, and the catalyst for it looks like it was one big trader who had several $100 million that they were able to use to push things lower on Binance and Hyperliquid at the exact right moment around Trump's tweet about the Chinese tariffs. So it was just a real shame, and I would like to see no more stuff like that in crypto. So yeah, we'll see what happens though. And looks like for right now, what's happening is Starlink. Mike's Starlink is I think
Yeah, I
back.
can't wait. I can't wait till I get that fiber this spring. It's going to be a game changer when I get fiber.
Cool, man. Well, do you want to wrap things up here today?
Yeah, we might as well. It looks like Elon's trying to cut me off. His boy CZ must have given him a call because we were talking trash on him.
I don't know, man. I don't think I was really talking trash. It's more like, the optics of the biggest crypto crash ever
The
caused by
data speaks for
Binance.
itself.
I mean, it's like, like the biggest crypto crash ever, directly attributable to Binance's margin system.
Oh,
And
dude,
then a
it was
couple days
way worse than
later,
FTX.
way
Way worse
worse.
than FTX.
Well, so was it though? FTX was like just straight up fraud. Like, that guy
No,
was
I
just
mean, I mean
stealing money.
dollar amount wise.
But dollar amount, it was way worse.
Yeah,
But, it's just like
yeah.
that
Thanks,
can't,
thanks for detailing that because
I
yeah,
mean,
it,
it's
it
just,
definitely wasn't more malicious necessarily, but dollar amount wise, it was much worse.
well, maybe it was actually malicious because in the days leading up to October 10th,
I'll use the word
Binance,
negligent instead because yeah, FTX was just a shit show.
yeah, dude, that guy, he was using QuickBooks for his accounting.
I
Like,
know it was what was going on behind the curtain was just disgusting.
I mean, and then that the Alameda lady talking about like life not on meth is not fun or something. Like she was
Oh,
managing billions of dollars, bro. Like
oh, and
what?
she did it on an interview. It wasn't even like she got caught getting hot mic. You know,
That's
like
right.
she was doing
That's
a straight
right.
up interview.
Remember her saying something like the interviewer asked her like, "So what type of stops do you use? Do you use stops?" And she was like, "Stops? We don't use stops." It's like, well, no shit. So,
Well,
oh man.
And CZ's the one that pulled the curtain back on that too.
Well, look, I mean, he was able to look at the FT token and see that it was
Well,
just a nothing burger.
wasn't he gonna do a deal with them, and he wanted to look at their books, and after he looked at their books, he was like he did some post where he's like, "I'm dumping FTX token or FTT," and it just caused the whole house of cards to come crashing down, and FTX was, artificially inflating Sol at the time, and that's what made Sol dump down. I think it was like $30 or $20. Because I remember I actually bought a decent chunk because I was like, Sol's not going anywhere. And so I rolled the dice on that one and made a decent amount of money on that. But yeah, that was an interesting event, especially in the depths of a bear market.
You know who's done the best, deep dive walkthrough of that FTT token and the way that Sam Bankman-Fried was using it? Saylor,
Go ahead.
Michael Saylor, man. He
Oh,
he
okay.
was he was being interviewed, I think, by Patrick Bet David, and he walked the audience through how Sam Bankman-Fried was running his fraud using the FTT token. That
Mhm.
was part of it. It was a great walkthrough. But what happened on October 10th, though, like, look, what FTX was doing was just straight up fraud. But what
Mhm.
happened on October 10th, that was like a brilliant directed attack on Binance's margining system. Like, whoever pulled that off, like, number one, you got to have balls, bro, because like you're going in with hundreds of millions of dollars in initial margin. So,
Mhm.
like, they had the
Well,
capital to do it.
FTX was just a shit show that was like I said, it was a house of cards. Somebody breathing on it was going to take that thing down. But what you're talking about with Binance, that was a very orchestrated, very like surgical attack. They knew exactly what to do, how to do it, when to do it to cause, that chain reaction, that cascade effect that just, dumped
Exactly.
everything and caused those liquidations and to make sure that it kept hitting those right liquidation levels to make it
Exactly.
hit the next one.
That's exactly right. And, as this industry becomes more regulated, I would expect that if there are events like this in the future, that people go to prison for this.
Yeah.
Like that's a crime. So, um, like, I mean, look, it was brilliant the way that they pulled it off. Very, very smart. But like, dude, they killed 2 million accounts. And
Well,
God
and a
knows
lot
how.
of those were the market makers and the people that move the crypto market, and that's why the crypto market's been so fucking dead and flat, because there isn't those market makers that were moving, the markets before. They
Yeah,
all got wiped out.
yeah. It's kind of funny. Binance, some of their makers, like, isn't one of their big market makers called Wintermute or something like
Yep.
that? Like, their own exchange killed one of their own market makers, which is,
Mhm.
kind of funny how that works out. But man, I want the days of that type of targeted attack to be behind us when we
Mhm.
get some real true regulation in these markets. There's a part of me that likes the Wild West, but at the same time, like, I don't want to see millions of people go to zero for no reason. Like, that's
No.
just stupid,
I mean,
So
if they make a bad investment or something, that's one thing, but, through a, a malicious attack and no fault of their own, yeah, that's definitely not what we wanna be seeing.
no, not at all. So, did you see also, Mike, that the DOJ opened an investigation into Ant? What is it, Ant Main? The Yeah. So they opened an investigation. I think it's called like Operation Red Sunrise or something like that,
Mm.
into Antmain. If anyone doesn't know, they're the manufacturer of all those or is it Bitmain? Is it Antmain or Bitmain? They make
Might
all
be
of the,
Bitmain.
yeah, Bitmain. They make the ASICs. All of those Bitcoin and other
Well, I know there's
cryptocurrency.
the Ant Miner, so maybe it is Antmain.
Antmain or Bitmain. I don't recall the exact name of it, but the Antminer, the
Mm.
most popular Bitcoin
Yeah.
mining hardware ASIC,
Mm.
is now being investigated by the DOJ, and we'll see what comes of that. But yeah,
Well, I guess we'll end it on that. But
ah,
yeah, so be safe out there. Hope everybody has a great Thanksgiving. Obviously won't be doing a show tomorrow, but have a what Friday we'll be doing a show. But have a great Thanksgiving. Try not to piss too many people off, or with all the crypto talk and or politics or religion.
oh, it'll be
And
great. No, no, no. Do the opposite of that. You talk only about politics, religion, and crypto. Your family will love you.
oh,
It'll
I
be
know,
great.
right? Yeah, because it's nothing is brings a family together like talking crypto, politics, and religion.
And make sure to mix a lot of alcohol with that too. It's a
Oh,
great recipe.
absolutely. The
Yeah,
drunker you get, the more convincing you are.
exactly right.
Well, David,
Uh,
thanks again for taking the time to be on.
of
It's always
course,
a
man.
pleasure.
Happy
And
Thanksgiving, Mike, and everyone. Thanks so much, man.
take care, brother. Until next time, Veteran Crypto out.